YouTube, you could be anywhere in this world, but you're right here with us. So thank you for joining us. I'm Chris. This is Dave, and together we form the Traders Creed. This
Yes,
is
sir.
another great um, chance, Dave, to go ahead and celebrate. Um, you know what? I'll let you do the rest, Dave, just because we're hitting another milestone, Dave, and we just continue to keep dropping gems, bro. Honestly,
I
and
think so.
uh, and the feedback we're getting, I think that's probably the best. I think teaching has become like a whole new journey that I don't think we both expected. Especially um, like kind of how it's going. Um, yeah, I'm just like kind of in shock, you know.
Yeah, man. Yeah, it's insane. You never know where you're gonna end up in your journey of life. But as Chris just mentioned, I think teaching is just something we truly didn't expect, and the amount of joy that we derive from it, the amount of feedback that we're getting, positive feedback, some maybe even negative feedback if we get it. We're always open to constructive criticism, and the amount of results that people are getting, if they're getting anything from our content, just makes us genuinely happy. And we continue to hit milestones that we're just genuinely proud of. We start small. Our YouTube is still growing, but we hope that we can continue to grow it to the extent where we can reach out to more individuals out there, more retail traders that actually need the help. Because as we've discussed in prior videos, the information out there is in quality. If it was, there would be a lot of traders that would be making money, and that massive gap between professional, successful traders from amateur and losing traders wouldn't be that big. So, but I guess that's just the element of a zero sum game that's going to come with the territory. But Chris and I are on a mission to make sure that we can close that gap as much as we can. Obviously, we can't help everybody because from personal experience, if there's one thing that I've known about trading all my years is that it's either gonna be for you or it's not. You're either gonna get it or you're not, and that's just the way it is, man. But with that said, we just want to go ahead and have a little toast to the 120 subscribers that we've managed to accumulate for the month of October. Chris and I, we actually set out a goal saying, how many videos do we need to put to at least get our content going out there, and hopefully peak 120 subscribers. And we managed to hit that little goal. We didn't think, I think it's a little bit naive to put those types of arbitrary numbers on things you can't really control, but we managed to hit it, so we're pretty
Yep.
excited. I just want to take a little shot. Chris and I are going to take a shot with you guys wherever you are in the world. We just want to say we love you, we appreciate you, thank you so much for the love and support. By the way, before we take this shot, hit that like button, hit that subscribe button, and notification bell button if you want to stay up to date with any and all of our content. We described the schedule for the weeks coming up now. Early in the week, generally Mondays, they're going to be analysis updates, analysis breakdowns, maybe a pair or a handful of pairs or opportunities that we are looking to exploit for the week. And then maybe midweek around Wednesday or Thursdays, we will do some type of training video on much more specific elements to our method, so you guys could really trade what we're teaching you with a lot more confidence, fluidity, and like a boss, man, if I were to really put it in any way, in any other way. So cheers, guys. Here's the
Cheers,
shot.
brother. Much love, Dave.
Yeah. That burns so goddamn good, man.
Now, if I can add
So
a little to that, Dave, if you don't mind, the series we're starting on Monday is called Money Making Mondays, and the reason why we're choosing that is we just kind of wanted to get we want to give you guys kind of some ideas to play with throughout the week, so you guys can make some money. So it's not we're not literally making money that day, but that's how it starts. It starts with ideas, and that's why we decided to call it Money Making Mondays.
yeah. So that is a new series that we will be engaging in. We will have a separate playlist for that. Mind you, it's just going to be possible and potential trade setups that we can identify for the week, buy week, sell week structures, or anything that we can do to identify how we're going to play the market for that week. So With that said, that is the upcoming schedule for the coming weeks, months, and potential years. If anything changes, we will let you know up to date. But with that said, this is the training video for the week. It is going to be on peak formations, our buy week and sell week structures. We want you guys to start. One of the things that Chris and I, we have noticed with the retail space is that they really don't know what direction to trade the market on any given day, week, or month. And this just comes from lack of process, lack of really understanding what they're doing and specializing in something. If you're just some person that is just slapping on indicators and taking every signal that presents itself, or you're chasing every tick of the market, I got news for you, man. Your career is going to be very short-lived as a trader. And this is why 90% of traders are failing. They're losing money consistently. And not just that, a lot of the shit that's being taught out there doesn't help you understand what Chris and I are really going to try to talk to you about today. Doesn't mean we have the secrets. Mind you, our method has just been a compilation of all of the brilliant and great traders that we have studied, the great minds that have came before us, a lot of people that we admire. And it isn't very many, because it's in this industry, bro, it's a lot of smoke and mirrors, a lot of fluff, a lot of people with insidious agendas. And it's really difficult to find people with genuine intentions that want to help the retail space. Mind you, Chris and I, we had no intentions of teaching. We were just connecting through social media and just trading together, sharing ideas, because trading is a lonely business, man. So when you can find somebody that speaks your language, the language of the markets, you're going to resonate and you're going to click right away. Chris was my buddy, man, in that respect. And we ended up growing to be really good friends. And then we grew to become business partners. And now we're trying to tackle the fucking world and leave a bang in the industry together. So our channel is going to be that channel that you really, really love or you really, really hate. And either way, we're still going to make money with or without any of you fucking people. So sorry, man, we're just blunt as fuck as well. Just so you know, whether you love us or hate us, we stay making money, man. So ain't no worries. But with that said, let's go ahead and pull up my charts. I'm going to go ahead and accept post here, Chris. And we're just going to get straight into the training, just because I want to keep things a little bit simple, straight, and quick. Give me 1 second here. Pull up my chart. Can you see my screen, Chris?
Yes, sir.
All right, man. So once down our training video, we will try to spot a real live example. And I managed to spot one. Chris and I managed to spot one on the pound yen. So we'll go ahead and try to apply what we're teaching you in real time. We're not going to cherry pick shit to show you that what we teach actually has edge in the market. So first of all, let's talk about peak formations. What is the definition of a peak formation for us? Either when the market has put in a high or low of the day, week, or month. You're never going to truly know when that is up until that candlestick for that specific time compression has closed. But you can identify a much more clear bias and direction to trade if you're doing your top-down approach. One of our greatest strengths, at least in the method that we teach, and I think one of the things that separates Chris and I from many other traders, is that we have a very beautiful way of holistically combining the macro and the micro structure and trending direction of the market. And if it, like, for example, if we see a macro bull trend on a higher time frame, daily, weekly, monthly, whatever, but yet on the shorter time frames we see opposition, we see you know what, the shorter time frames such as the hourly, 15-minute are signaling a short, you bet your ass we can play it both ways, dude. We have a way of just we've mastered our method and our craft to the extent where we can holistically and symbiotically play both sides of the markets without really confusing ourselves, without over analyzing anything. Because once you've been in the game long enough, you'll be able to nut out specific things that work for you and things that you understand. And this is what we're going to teach you that's help us really simplify picking a directional bias for a specific day, week, or month when you're trading the markets. And we can do this through peak formations. Once again, that is either the high, low, day, week, or month of any given currency pair. And then within, when you start to scope in on lower time compressions, what you'll notice is that when that low, that major swing low or major swing high is put in, it'll start to structure itself in a specific way. It's a very cyclical type of pattern in which these big institutions are maneuvering themselves, which we call the profit release stages, which we'll get into another video. We're not going to really confuse you so much on this one. We want to keep things simple and crystal clear. But mind you, that is something we will teach you in another video. However, you'll notice that on any given week, the market has to move one way or another. The markets are going to do one of two things, man. They're either going to trend or they're going to range. Plain and simple. Some weeks you're not going to get any trading opportunities because the markets are going to range. They're just going to chop around. But the times that the markets are moving, that's when we look to identify our bi-week structures in the form of accumulation zones and our sell week structures in the form of distribution zones. So we're going to go ahead and show you what they generally look like. So you have a template. Mind you, you're going to want to take some serious notes on this one. You're going to want to take copious notes because I shit you not, Chris and I, we cannot make this up. You will see it time and time and time again. A lot of our students that have recently joined our Discord have been seeing instantaneous results. Mind you, we're not guaranteeing you the same results, but most of the traders that we've been inviting into our Discord, they already come with the level of experience. So when we start to really simplify the process and our method to them, they have that aha moment. And when you can really start to pick an accurate direction for the market for that specific week, man, it's almost like you can see into the future. You're not going to confuse yourself in trying to figure out, oh man, which way do I trade? It's signaling, all my indicators are signaling a long play, but I'm seeing, the market topping out, or it looks like it's about to sell off. We're going to show you how to trade without all this bullshit, smoke and mirrors, no indicators, no Fibonacci's, no moving averages. I know I got a moving average in here. Disregard that shit. Fuck it off. It's on there just so I can anticipate what retail traders are looking at and how I can exploit them and take advantage of what they're looking at. So part of being in a zero-sum game is that you always got to be that next step ahead of the next guy. So with that said, peak formations, man, once again, as we just illustrated, it will either be a major swing low for the day, week, or month. Generally, you'll see a lot of our templates, the sell week and the buy week, on lower time compressions. I would say about the hourly to 15-minute time compressions are some sweet spots. You could definitely spot them on higher time frames, but if you want to be an intraday trader, a day trader, you want a little bit more action throughout the week, this is going to serve you best on lower time compressions, given that you have already done your top-down approach. You already know how you want to play your macro, fundamental, or direction, whatever. Once you have that down, as long as you don't confuse yourself, this is going to acclimate itself a lot better on shorter time compression. So generally, when we get an accumulation zone, our bi-week structure, it'll generally accumulate or it'll hover around a major significant level. We're not going to go ahead and discuss what those are. Go back to some of our prior videos. We discussed that and the importance of those levels. And then after that, it'll have what we call a fake out, a false breach. Most of the time, not all the time, it'll retest the level, support level, breach, break the neckline, which we call our break of structure. So maybe after an extensive downtrend, the market will kind of just hover around the lows, fake out, come back inside that level of support, that low point that it put in, breach that neckline, retest, impulse move, range, stop hunt, impulse move, range, stop hunt, and boom. If you can manage to identify this, you don't have to time this exactly as it's unfolding. It's unrealistic to think that you'll do that. Sometimes we don't do it all the time. We have done it, and it provides insane risk to reward profiles. But once again, it's unlikely to think that you'll be able to time it and capture it in real time. We're just looking for clues as technical analysts. But the more clues that you can identify, the better confidence you'll be able to have when you execute your trades, then the more you'll maximize the odds of success for your trade. So once you get that break, 9 times out of 10, it will pull back. This will be a very, very awesome time to enter short. Once you enter, you can choke up your stop loss right underneath that low point. Once you get some bullish strength, a nice little tail on the candle there. Or if you really want to be conservative, you could put it underneath. You could nail your stop loss underneath that low point that it just put in, that fake out. If you happen to miss that, don't worry. Wait for an impulsive move. Wait for it to breach that high. Our edge comes when the markets start to exhaust themselves, when they start to range. In these ranges is when we can really begin to engage in our order flow analysis in a much more detailed manner. And this is the specialization that we start to teach a lot of our students. So despite the fact that we're teaching you this, it's going to take a lot of practice. Don't just think because we teach you this, you're going to start trading the markets and start making money consistently. There's a lot more that goes into this. So we're just giving you our template, and then in further videos, we'll go ahead and get into much more sophisticated elements. Or if you want to pick this stuff up in a much more rapid pace of time, consider joining our Discord. There's details in our description box down below. But anyways, let's get back into the video. So once you get that range and you get these stop hunts, these deep breaches outside of those ranges, these will be phenomenal times to enter the market. And then look to take a target at the midpoint of the range and at the high, or if you really want to let your balls hang, go ahead and take it past an extension of that range. Because the majority of the times, you'll have 2 to 3 cycles that go on in this template, this bi-week structure. So it'll impulse, 1, pull back, 2, 3, and then after the third one, it'll generally top out into our sell week structure, or what we refer to as our distribution zone. And this can unfold in so many ways. It won't always look like this, dude. It could look so many goddamn ways. It could look like a head and shoulders. It could literally look like just this massive range that's just chopping around. It could literally just put in a double top. It could look so many ways, but there are other things that we utilize in our method, and we teach our students to really maximize their odds, in which we engage, which we call our filtering process, to be able to pick off these points a lot more accurately. So anyways, once you get that peak formation or distribution zone and it tops out, then you rinse and repeat the cycle. So you get your break of structure.
Just like you said earlier in the vid, Dave, the market's really cyclical. So
yeah, the markets are
really
cyclical.
Yep. And I kind of wanted to ask you something, Dave, while you're drawing that. How do you know exactly what structures you're targeting, or how do you know where to target for you to exit your position if, let's say, you're longing? How do you know?
Yeah, we like to keep things very short and simple. I don't like to take 50-50 trades because to me that's just gambling. You might as well flip a coin. Our method is the purpose of our method is to eradicate as much of the decision-making process as possible. So we know 9 times out of 10, not 100% of the time, but 9 times out of 10, if we're getting in at that precise moment when that stop hunt is occurring and we start to get that massive volume from institutional volume, it will come back inside that range, and more often than not, it will breach outside that range. We like to keep things short and simple. Take your target. If you're pinching off a very tight entry at those lows, take your target at the midpoint, at the high of the range. Once again, if you really want to let your dick hang on this one, you're treading on murky waters because you never know when the market's going to reverse. We've seen instances where it'll breach that high and we have an extended target. It'll come back, clean us out, and then make our target. So you want to be quick to take your money and then just let more price action unfold. Don't worry about, oh, dude, I could have held that trade and I let so many pips on the table. Don't worry about that, man. Just take your money, be grateful, and then the opportunities are endless in the market. As day traders, we have seen endless opportunities, but you have to be patient and let price action unfold once you're out of your positions. Don't be too quick to chase anything. But to answer your question simply, Chris, we like to take our targets at the midpoint and at the high of the range, and then we're out, and then we just wait for another. If the cycle is still intact, if our bi-week structure is still intact, it will exhaust itself once again, and then it will provide us another stop hunt, and we will look to re-enter, rinse, and repeat the cycle. And in this case is what we call milking the idea, the trade idea, dude. You bet your ass, like if we can time a buy week or sell week structure, we're making a fuck ton of money.
Yeah, what I like to say, Dave, is I'm here to make money. I'm not here to be right. Because in all honesty, I don't care. I'm just here to make money.
Yeah, dude. No, we as traders, as professional traders, this has nothing to do with ego. We don't care about being right. We just have a method that we trust, that we back tested for several years, and we've seen recurring themes that we can exploit for profit. Your job as a trader is to identify those paper thin edges in which you can, deploy risk and make multiples of that risk in the form of reward. If you can do that, you're going to make money over the long term. And the more skilled you become as a trader, your strike rate should go up. I really would not be in this game if my strike rate was horseshit, bro. Like if I was, and you've seen our ability to trade. If you go back on other videos, a lot of the calls we've been making, the analysis calls, the things we've anticipated. This isn't because we have an all-seeing eye. This isn't because we have some secret knowledge or whatever. It's just because we trust our method. We understand our method at this very, very sophisticated level. We've been inside that rabbit hole, and we've simplified it to the point where, look, we have a checklist, what we call our filtering process. We have specific templates for any given week, and we know what our core setups look like. Rinse and repeat, day in, day out, week in, week out, year after year. This is what has allowed me to become a full-time trader for a couple years now. And it's helped me make a lot of fucking money in the process. It's making a lot of our students money in the process. And it's just because, dude, it's just trading it's really not that complicated when you understand what you're doing, bro. It's really not. Or maybe, you know what? Maybe that's just the mark of anything that you become good at. Maybe trading is difficult. I will never make it. I apologize if I made it seem easy. It is very fucking difficult, but I guess over time, as you become experienced, it should become easier, dude. Like for example, Chef Ramsay, dude, he is a brilliant chef. And that came from his ability to constantly practice and work on his craft for years. Like I'm pretty sure you put Chef Ramsay in a room and you put a rookie cook in the room, they have the same equipment, access to the same equipment, same ingredients, and they got to whip up the same dish. I think is going to make the better dish. The guy with the same experience, but yet they all have access to the same equipment, same ingredients. They got to make the same dish. Trading is no different, bro. This is an art form. It's a craft. And over time, if you're really sharpening your craft and you're getting that quality practice, you should be getting better over time. So yeah, if your strike rate is horseshit after many years, you probably need to hang up the gloves, bro. I don't know what the fuck you're doing. I really don't. Like, you might as well start flipping a coin, or go to Vegas, bro, and gamble there, because that'll probably be a lot funner than this shit.
Yeah, you're gonna have to find that epiphany. You're gonna have to find that method, and you're gonna have to stick with it. You can't deviate from it. And like we like to say, David, I think trading is just literally survive to trade another day. That's all it is.
That's what we tell our guys day in and day out. In order for you to survive your learning curve, you just got to trade. You got to make sure that you survive to trade another day. That's basically it. That's going to come from very, very tight risk controls. And our method caters to specific risk controls and percentages of your equity, depending on where you're at. That's a much more detailed process that we get into with a lot of our guys. But you need to find your truth in the market and stick with it.
Yeah, and be realistic about it as well, because that's why me and you, Dave, we kind of bang about just like doing this part-time while you're working, because that's how we're able to make it work. Like, if you want to continue shooting in this game, if you want to learn how to aim, you're going to have to shoot. And if you don't have ammo to shoot, then how are you going to aim?
Exactly, man. So you never want to put yourself in a position where, until you obviously have a decent amount of equity in your trading account for you to sustain yourself, you have many years of consistency, back-tested data, you trust yourself, you trust your method, you have the discipline to control yourself in bad times, in bad patches, and you got money saved in the bank to support yourself in the event of bad trading days, trading weeks, trading months. Then feel free to take the leap of faith full time. I did, but there's nothing wrong with having a job. If you have a job and you're trying to get this shit down, stay at your job for as long as you need to, up until you get this shit. Don't rush your process, and save money, have money in the bank account, keep funding your trading account. given that you trust yourself, don't be funding your trading account if you're going to keep fucking account. Otherwise, you're just donating money to the markets. But once you have a little bit of consistency and you trust yourself, let your little monkey brain stimulate you and start blowing up money. Start building your book of business and get it to a reasonable sum. I think, dude, with it, depending on everybody's situation, this is not financial advice. Everybody's situation is different. But I managed to go full time with about like roughly $18,000 to $20,000 at my trading account. I had money in the bank as well. That wasn't the only money that I had to my name. I made some money, a little bit of money in Bitcoin as well. That helped in the time frame that I went full time. And I was young, bro. I had no kids, no responsibilities, no wife, no girlfriend. It was just me, my computer, and my discipline, my focus. And I always said, look, if all goes to shit, I can always go back and get a job. But there was a point in time, dude, I was shorting the euro in 2018, roughly when I went full time. Dude, everything I touched turned to gold. That made my career. Like, I made so much fucking money shorting the euro in 2018. Like, but that wasn't really skill. That was luck, because anybody can make money in a trend. So I'm very grateful for that, man. I learned a lot through those experiences. I was scalping the shit out of that downtrend. Yeah, dude, it's just like I've been full time since. I haven't looked back. But anyways, that's a conversation for another day. We'll probably talk about, what it takes to really go full time in this business. But yeah, Chris and I, we can bang about that all day. Let's get back to the meat of this video. So once you get your bi-week structure, this is what we call our accumulation zone. They look slightly different all the time, but literally the context is always the same. The form is a little bit different, but as long as you're getting price hover around these lows, you get this major breach. Sometimes it'll literally come back, create that fake out, stop that fake out, and then come back again. You'll get several variations of that. The context is always the same. The form is always different. But as long as you can really understand what you're looking at, you should have long-term consistency. So you could generally play this for about 2 to 3 cycles. It'll impulse, consolidate, stop hunt, impulse, consolidate, stop hunt, and then maybe top out, or maybe after that second impulsive move, it'll just completely tank. But generally, you'll get about 2 to 3 cycles, and then when it tops out at that peak formation, you'll get your sell week structure coming in. It'll breach, pull back, consolidate, stop hunt, come back, break the range, give you another entry point right there, stop hunt, rinse and repeat, baby. Impulse move, the move will exhaust itself, stop hunt, and the cycle repeats itself over and over. We cannot make this shit up, bro. Like, this makes us money day in and day out, over and over again. The key thing is being able to get quality practice and understanding what you're looking at. Don't just think that just because you see this stuff, you have to take it in the right context and in the right form. That's stuff that we teach a lot of our students. If you're interested in that, please consider joining our Discord. We want to help you guys. We really do. But we hope that the content that we're giving you now, it does you justice, and it should, man, because we've been getting a lot of positive feedback on a lot of the trades that we've been calling out, a lot of the pairs that we've been analyzing, and a lot of the setups that we've been giving you, because this stuff is really not that complicated. So we hope that it's helping you. But that is our little training video on peak formation. So peak formations are, just in summary, at the highs or lows of the day, week, or month. And then once the market has topped out or bottomed out, it will generally start in that little manipulation cycle, where it'll impulse move, et cetera, everything we just talked about.
Hey, Dave, if I could ask you a question. So during that form, right, because we can't really touch up and let people know how exactly it's going to look, right? Because we have no idea how it's going to play out. But during that moment, me and you are so good at entering that at that precise moment during the stop hunt. I want to ask you, just because a lot of the things that our guys ask us when we take a trade, and because let's say we're buying in the face of selling, they ask us things that a lot of it is intuitive. Is there anything that you can explain that kind of makes you create a bias during that form for you to pull the trigger? Like, is there any confirmations or anything that you can give as feedback that may be kind of a little intuitive, once again, because it's tough to explain when you get that moment, only real traders know what we're talking about. When you see that time to enter, you pull the trigger because you have all those confirmations and you've seen all these things play out so many times that you just pull the trigger. So is there anything that you can kind of get into in regards of like those intuitive things and just knowing when to press the trigger?
Yeah, man, that's a phenomenal question. I actually appreciate you asking that, bro. So this is the thing with trading, guys. I need you to understand this. And I'm going to do my best to help answer that question as best to the best of my ability, because trading is just as much an art as it is a science. It's not a perfect art and it's not a perfect science. But people don't believe this. With any skill, a lot of intuition comes into play. You can call me horseshit, you can call me bullshit and this and that, but I don't care who the fuck you are, man. At least in our personal experience, intuition plays a big role in our trading. So there's just moments that there are certain things that I just can't articulate to certain people, because it's like, dude, like I just see something and then I feel it and I'm like, you know what? Now I need to start paying attention to this, or I need to pull the trigger on this trade. However, on a quantitative level, on a quantitative metric, for you to identify like a peak formations, they're generally going to be at major swing points. When you get breaches of major highs and that liquidity has been cleaned out, or major lows, that is when you want to start paying attention. Then that's when you could really start to figure out, okay, are we in a buy week, sell week structure? And in this case, in the pound yen, it looks like we are going to be headed for a sell week structure, or at least we can look to exploit a short opportunity for the time being. So in a quantitative element, just look for breaches outside major extreme points. Because usually at these extreme points is where a lot of liquidity is residing, and then look for breaks back below those extreme points. So in this case, we got major highs, we got a new high put in, so this is an extension of the range. Then it failed. There was failure up there. So those little clues you got to start paying attention to, and then now you go back into our process, rinse and repeat. So let's go ahead and do that. Then you got to start scoping in at a microscopic level to really figure out, okay, is this a legitimate breakdown, or is it a false break? Is it going to fail? So give me a second, guys. I got my fucking internet fixed, and it's still being a pain in the ass, man. These sons of bitches. I've been bitching about my internet for a while, and they came and fixed it, and then this shit. It's lagging. Give it a minute. Fuck you, man. All right. Oh my God. Just give it a minute, guys. Sorry for the technical difficulties. We'll get this settled. I promise you, once I stop being a cheap ass, I will invest in some like high quality internet. But right now, I'm just like saving money up the ass, dude. I'm trying to get rich as fast as possible. Anyways, here we are. Break of structure at the high.
You
Chris
don't get
knows
rich
what.
from spending. Yeah, that's.
Yeah, you don't get rich by spending a fuck ton of money, bro. So when you're young, take advantage of these opportunities. Everything that we make from trading, we reallocate that into longer term portfolios, bro. Everything that we generate from our businesses, Chris and I, that shit gets saved, bro. Like we're not stupid with our money, man. And mind you, these were self-taught skills. So yeah, suck on that, world. Anyway, so you got that break of structure right there. Look at that. You got that little range that we were talking about. Okay, yeah, man. One of our guys pointed it out. I had that little magnet thing on. That's why I was being a pain in the ass. Okay, there we are. Stop hunt right here. Boom. You guys see that? I know you see it. Impulse move.
Has a nice little baby trap as well right before the stop.
Yeah, so you know what? Let me go ahead and just draw this out a lot more cleanly. So here we are. Let me get the drawing tool. And this is a real-time example. We're going to apply our template and give you a potential play. Well, tomorrow's Friday. We may not even get this shit, to be honest. But for the following week, this might be something you want to pay attention to. This is on the pound yen 15-minute chart. Here we go. We got a little range. Stop hunt. Boom. Confirmed range. Extend that range out. We got another confirmed range right here. Little stop hunt. Cleaned out that high. That's a little baby one. Little baby one. That's cool. We like the little baby stop hunts. There we go. So we are in this right here. Once we get our first impulsive move, our confirmed range, our break of structure, there is a high probability on the balance of probabilities that we may continue to see some more weakness for the pound. How far? I don't fucking know, bro. But what I do know is that this right here is a very clean level to target. Why? Because there is fucking money here from buyers. Buyers are still profitable down here. So just maybe we could look to target down there. But what can we expect moving forward? We also know that there's money sitting right here. We show you guys how to map out liquidity properly, or we'll show you how to do it in other training videos. But for right now, just bear with us. If we get a pullback, failure, that would be a phenomenal opportunity to go short. Also, if that goes south and we get a breach of that high and failure, that would be an opportunity to go short as well. And then look to set your targets at this low. Once again, if we do get this position here, mind you, this is the low of the range. So if you take a trade here, be in and out of your trade. Your first target here, take your second target there. Boom, done. Mind you, we can always be wrong. Manage your fucking risk. This is never financial advice. Do your own due diligence. But this, plain and simple, is what we're talking about. This is lifetime or principles of what we just discussed being applied on a real chart. So the pound yen might be interesting, maybe for tonight, London Open, Friday morning. Maybe we may not even get this unfold for this week because, mind you, the markets will close tomorrow. But on Monday and the following week, this is something to really, really pay attention to. So we got a major breach of a significant swing point, new high put in, break of structure, range, stop hunt, impulse move, range, boom. We are in that second stage of the cycle. So these are some scenarios that could unfold. But other than that, that's pretty much all we have for you guys. So we're going to call it a wrap. We hope that you managed to acquire some significant insight on this. We hope that our content is little by little helping you improve your performance, improve your edge, and understanding of how the market is actually being played. There is no superior method out there, but there is a specific way of approaching the markets that we feel is going to maximize your odds of success. That doesn't necessarily mean that it's our method, but we truly believe that meta games, order flow analysis, trying to be one step ahead of the next guy is how you should really be focusing on the game, and how big institutions are really maneuvering their ways in the financial markets. Because
Hey,
at the end
let me
of
ask you this: what type of trader are you?
I trade wherever the fucking markets give me, bro. If the markets are trending, I'm a fucking trend trader. If the markets are choppy, I fade strength, I buy weakness, plain and simple, man. I'm generally a day trader, but if I were to give you the long,
That's what I was waiting for. That was what I was looking for.
at the end of the day, Chris and I, we are short to medium term discretionary, quantitative, and technical currency traders that specialize in order flow analysis, liquidity manipulation, distribution, i.e. stop hunting as it's commonly referred to, any and all of the covert tactics that these big entities, smart money hedge funds deploy into the markets to manipulate the retail trader out of their money. Boom, we're going to end it like that. Hit that like button, subscribe button, notification bell button. We will catch you guys next time. And before we go, just one more shot. Thank you so much for all the love, support, growth that we've been getting. We truly appreciate you guys. Here's one for all of you. From my boy Chris, because I love you, my man. It's not every day that you find genuine people that you can call your brother. So I just want to say I love you to hell and back, my man. Let's continue to do what we do. And as we've said, with or without any of you, we stay making cake, bro. So deuces, have a good night, good morning, good afternoon, wherever you are in our tiny blue planet. We love each and every single one of you. Take care, trade safe, trade smart. And as always, have fun with this. Much love.
Much love.